Hello and welcome to Explain the Charts, your go-to channel for detailed market analysis. Today is September 28th, 2025, and we are diving deep into GBPUSD, also known as cable. First, let's cover the news driving the market, as the fundamental picture is putting immense pressure on this pair. The dominant theme is the stark policy divergence between the US Federal Reserve and the UK's Bank of England. The Fed is maintaining a hawkish stance, with officials flagging concerns about inflation and stretched equity valuations, which is keeping the US dollar strong. In fact, recent reports show the dollar index, or DXY, hitting highs not seen in weeks, strengthening the dollar against all its major peers. Conversely, the Bank of England has adopted a more dovish and cautious approach. Recent BOE meetings revealed policymakers voting for rate cuts and a scaling back of quantitative tightening, signaling a much weaker economic outlook for the UK. This policy difference is a major headwind for the pound, attracting capital flows into the higher-yielding dollar. Adding to the uncertainty, there are looming concerns of a potential US government shutdown by this Tuesday, September 30th, which could inject a new wave of volatility into the markets. News outlets have been highlighting the pound's recent technical breakdown, with the pair falling to multi-week lows around the 1.3435 area. Analysts are overwhelmingly bearish, suggesting that rallies are likely to be sold into, with risks skewed to the downside. Now, let's turn to the daily chart and see how this news has translated into price action. Looking at the bigger picture over the past year, we can see a clear story of a trend reversal. The pair had a strong bullish run from the start of 2025, culminating in a peak above 1.37 in late June. That 1.37 area acted as a major resistance level, where buying pressure finally exhausted. Since that peak, GBPUSD has been in a confirmed downtrend, characterized by a series of lower highs and lower lows. This downtrend accelerated significantly at the beginning of September, which directly correlates with the news of a strengthening dollar and a more cautious Bank of England. Let's zoom in on the price action since August to get a clearer view of this recent decline. Here you can see the sharp drop on September 2nd, a massive bearish candle that erased over 1.2% in a single day. After a period of consolidation, the selling pressure resumed last week. Notice this large red candle on September 25th, where the price plummeted by 0.85%, breaking through several support levels. This move confirms the bearish sentiment we've been reading about in the news. The subsequent bounce on Friday, September 26th, appears to be a minor retracement or profit-taking after such a strong downward move. The price is currently sitting just above a critical support zone, which we'll discuss in more detail. The previous support levels in the 1.35 to 1.36 range have now flipped to become formidable resistance. Switching to the 1-hour chart gives us a better look at the short-term dynamics. Following the steep drop to the 1.333 level, the price action has been mostly sideways. We can see a short-term consolidation pattern forming, essentially a battle between buyers trying to defend this level and sellers looking to push it lower. The 1.34 handle has been acting as a key intraday resistance level. Price attempted to break above it during the last session but was rejected, indicating that sellers are still in control on any bounce. This tight range suggests the market is pausing, likely awaiting the next major catalyst, which could be the upcoming PMI data or news surrounding the US government shutdown. Now, let's drill down even further to the 15-minute chart to analyze Friday's session. Here we can observe the intraday struggle in granular detail. After making the low around 1.3328, we saw an initial sharp bounce. However, notice how the momentum faded as the price approached 1.34. The price action for the rest of the day was choppy, with multiple failed attempts to sustain a rally. This microview reinforces the idea that conviction among buyers is very low at these levels. Any buying pressure is quickly met with selling, which aligns with the analyst consensus that rallies are being sold. Returning to the daily chart for our final summary, let's recap the critical levels and potential scenarios. The overall picture is decidedly bearish, with fundamentals and technicals in alignment. The key immediate support level to watch is the recent swing low around 1.3330. This level was also identified in the news as a key technical floor. Below that, the next significant support is the psychological round number of 1.3300. On the upside, immediate resistance lies around 1.3470, which was a previous support area. Above that, we have resistance at 1.3525 and then the major psychological and technical hurdle at 1.3600. So, what are the likely scenarios from here? The higher probability scenario, which I would place at around 65%, is a continuation of the downtrend. A break and close below the 1.3330 support level would confirm this. This would be reinforced by continued dollar strength, weak UK economic data, or increased market fears over the US shutdown. Such a breakdown would open the door for a move towards 1.3200 in the medium term. The lower probability scenario, at about 35%, is a bullish reversal or a deeper correction. For this to happen, the price must firmly hold above the 1.3330 support and reclaim the 1.3470 resistance level. This would likely require a significant catalyst, such as a surprisingly strong UK PMI report, a dovish shift from the Fed, or a swift resolution to US fiscal issues that weakens the dollar. Even then, the resistance around 1.3550 to 1.3600 would be a very tough barrier for bulls to overcome. In conclusion, the path of least resistance for GBPUSD appears to be to the downside. Keep a close eye on the 1.3330 support level, as a break here could trigger the next wave of selling. Also, be prepared for volatility around the upcoming economic data releases and US political headlines. Thank you for watching Explain the Charts. Don't forget to like and subscribe for more in-depth analysis. Trade safe, and we'll see you in the next video.